The $30 triple, quadruple, whatever top makes all kinds of sense, and it is going to break.
I must break you.
Well, hello there, my friends. Rafi here from the Endgame Investor with this week's Silver Report for Arcadia Economics. And today I wanted to go into why a $30 resistance makes a lot of sense for silver. And once it breaks through, we will head towards $50 and more.
Or maybe more.
And this is something we went into last week, but I wanted to really nail it home today and show you 3 time periods of 3 triple tops. Some would say quadruple tops. Do we have a triple top? Do we have quadruple top at 30? Why it makes sense relative to the 1970s and the years 2009 to 2011 before we hit $50 there. You'll see the math on the paper, on the virtual paper on your screen. And we're going to go into the aggregates in the monetary system, what is going on in the bank reserves and in the Fed's balance sheet, which is still draining, and the Fed is still losing money every week. And a little bit about gold on COMEX, gold versus Bitcoin, silver versus Bitcoin. China is selling treasuries at an all-time record pace for this month. So you have the chart there. And with that, let's get on with this week's Silver Report. Today's Silver Report is brought to you by Fortuna Silver Mines, symbol FSM. Last week we went into the earnings report from May 7th, but I forgot to mention that they actually exceeded expectations, or topped earnings estimates is the technical term.
Use the parlance of our times.
In the parlance of our times, you know.
I didn't even see that because I was just reading and looking at the earnings themselves. But here is the context. Fortuna Silver FSM Q1 earnings tops estimates, revenues up year over year. Fortuna Silver Mines reported first quarter 2024 adjusted earnings per share of 9 cents, which beat the Zacks consensus estimate of 3 cents by a solid margin of 200%. The bottom line also marked an 80% improvement year over year. Results were aided by higher gold sales volume and improved gold prices. Yeah, damn straight improved gold prices. They'll keep going up. We're not going below 2,000 ever again, I don't think. Fortuna Silver's revenues increased 28% year over year to $225 million or higher on higher gold sales volumes and prices. Production, gold equivalent production up almost 20% year over year. I wanted to play a little game here on the charts to show you what is going on. If we put this full screen, we will look here is in the candles, we have FSM. In the red line, we have GDXJ, which is the junior miners ETF. So we see what FSM does in relation to its ETF peer tracking the junior mining index. Here you see that FSM is up on a maximum scale, 179%, since I think this is since 2007, versus GDXJ, which is down 63% since 2007. If we go to a 5-year chart, we see also that FSM is beating out GDXJ 105% or 106% to 54.5%. If we go down to a 2-year chart, we see also that FSM is beating GDXJ 59.7% to 13.58%. On a 1-year chart, same thing, 51% to 13.5%. Basically, on any time scale you pick, FSM is beating the ETF handily, going all the way down to 6 months, 54 to 28, 3 months, 91 to 37, 1 month, 19 to 8.7, even 5 days, 4.3 to 1.8, even yesterday, Thursday, May 16th, up 1.4% versus GDXJ, which is down 0.3%. So yes, there are reasons to purchase the mining ETFs rather than individual companies. It helps mitigate company-specific risk, etc. But on any time frame, Fortuna is beating the ETF, and it is a reflection of good management and just a generally good company, in my personal opinion. Do your own due diligence. And let's continue with this week's Silver Report, brought to you by FSM. First things first, bank reserves this week are stable at about $3.37 trillion. They've gone slightly up over the last 2 weeks, but not much. The red line here, where we are going to hit another banking crisis, is somewhere around the $3 trillion mark, so we're $370 billion away from that. There are going to be drains going through August, as this is the seasonal time where money supply tends to decline into the summer. The last time we hit a monetary crisis or a banking crisis was at this line in March 2023. It should be slightly above that, the red line where the next crisis is going to hit. And this is why the Fed is planning to slow down quantitative tightening in August or June or one of those months. I think June, actually, they're going to slow it down, but they're still going to do QT, but at a slower pace because they don't want these bank reserves to fall below wherever they were, around $3 trillion when the last banking crisis hit, and they're trying to be careful, but they're going to hit it anyway because, that's what they do. Meanwhile, the balance sheet is still draining. Last week, we drained another $49.136 billion. That is the most since about February. Yeah, since February. It might be a little bit more than that. So if it's more than February, then it's the most since December 2023. The biggest drain since then, we're at $7.3 trillion. That's somewhere in early 2021. We're going to hit the crisis line. We just don't know exactly when, but the monetary base is still draining, making it more and more precarious for the banking system, which will eventually hit a wall or a tsunami or however you want to describe whatever it is they're going up against, which is not good. The Fed, meanwhile, is still losing money every week on its bond portfolio and operating loss. And this is the back end of what causes hyperinflation. A central bank that loses money, they try to say that it doesn't matter and it doesn't affect monetary policy. Well, if it doesn't, well, then balance sheets don't matter and they can just invent whatever money they want and just put it in the economy without backing with any asset, which is a bunch of crap. These losses will continue. We have now $168.899 billion that are losses that are backed by deferred assets, meaning nothing. This, by the way, is what causes hyperinflation in Argentina because its central bank buys IOUs from the Treasury, which are worth nothing on the market, and issues currency. So they are at a loss because those assets that they get from the parliament or the Argentinian government, this is before Milei, they aren't worth anything. And so the Argentinian central bank is at a severe loss, which is what causes hyperinflation on the back end. It takes a while to kick in, and it's coming. Something interesting on the COMEX I noticed today. This is Friday, May 17th, but these are numbers for Thursday, May 16th. So we have the June contract here, right? You have open interest of 254,000. Open interest yesterday was up 2,523 contracts. Why that is interesting is because the June contract goes to delivery in 10 business days. You usually don't see contracts increasing in open interest when they are that close to a delivery day. Usually traders are buying the next active contract, which in this case is August, but for some reason, a whole bunch of traders opened the June contract. They think there's going to be a huge bump very soon and they'll be able to roll over, or they'll be able to just sell the contract for a gain, or they're taking delivery in 10 days. Who knows? We'll see what happens. There's still a lot of open interest that needs to clear out before we get to delivery in 10 days' time. It usually or almost always does, or pretty much always does, because the COMEX has never defaulted yet. But one day they will. I don't think it'll be this month, but it will be some month on an active contract. China is selling treasuries. The pace has accelerated to an all-time high. We have here monthly increase or decrease in treasuries and agency securities. Treasuries are, of course, the bonds that are issued by the federal government, and agency debt are bonds issued by Fannie Mae, Freddie Mac, other government-sponsored enterprises, aka fascist institutions, where you have a union between corporatism and state, which leads to fascism. But let's not say that because it's not nice.
I want you to be nice until it's time to not be nice.
Be nice.
It also leads to, economic crashes and such. And by the way, Freddie Mac is looking to buy second mortgages and hand out money so people can borrow against their houses and then lose their houses to the banks again. That'll be fun. Let's go through that again. A little bit about Bitcoin here. Bitcoin to silver. Bitcoin did hit a new all-time high in silver terms around March or April, right? It was like 2,800 or 2,900 ounces per Bitcoin, but it has fallen sharply since then. We're down to about 2,191 ounces. And there's another chart here which shows you that in gold terms, in real money terms, silver is real money, but it's not yet at the monetary ratio. So if we count Bitcoin in gold terms, the top really came in the end of 2021. It hasn't really exceeded that top since. And since coming close to testing that top at about 34 ounces per Bitcoin, the record was 37.5 ounces per Bitcoin, I think, in October or November 2021. Since then, the price has dropped steadily. We're down to 27.5 ounces per Bitcoin. Is that the top? Is 2021 the all-time high that will never be surpassed? I think so, and I promise I am never wrong.
I promise I will never die.
This is where I wanted to get into the triple top on silver at $30, why it makes so much sense. So the first part of this we went through last week. I'm going to add another prong to the fork. It's now a three-pronged fork, like, those forks that have three prongs on them. Sometimes you use them for spaghetti. Here we have 1978. I showed you last week, or maybe it was 2 weeks ago, it was one of these weeks, that there was a triple top at $6.50 from 1974 to 1979. It could have been a quadruple top, depends exactly how you count it, triple, quadruple, whatever. The CPI in 1978, when it hit 650 in November of 1978, before it broke through, was 67.4 points. That's the CPI measurement. And we all know that the CPI is 100% dead on accurate. And anyone who badmouths the CPI, well, he can just, I wanted to add here. So we have 67.4 relative to a $6.50 top. And now in 2008, and I'll show you this chart in the next slide here, the CPI was at 218.178. You have to be very exact here because the CPI is an exact science. Trust the science, people. It's very trustworthy. So May 2010, the last time when silver hit a triple top or a quadruple top of $20, chart on the next slide, you'll see the CPI was at 218.178. Now keep that in mind. See here the chart of silver during the triple top of 2008, 2009, that led it to the spike to $50 in April, or was it May, April 30th, I think. It was at the very end of April when silver just touched $50 over here, you can see. So before that, in the year and a half leading up to that, we had a triple top at 20. Could have been quadruple if you count this as 2. Do it however you want. This is not an exact science, even though it is. Trust the science. Now we all know that silver has been touching and going with $30 for some time now, since 2020. So we're at 4.5 years, 4 years, something like that. So CPI during silver $30 triple top. Where is the CPI in points now? It's at 313.548. And now we're going to do some math.
I'm afraid we need to use math.
Remember that first chart? We said that the CPI was at 67.4 at a $6.50 top. The ratio of CPI to the silver top at that time in 1978 is 10.4. And we reached $50 by 1980, so it was November 1978 to 1980. It's about 14 months ahead. So 2010, the CPI was 218.178 divided by $20 top, triple top, quadruple top in silver. The ratio is 10.9, very similar to 10.4. $50 was hit by 2011 after the late 2010 the triple quadruple top at 20, so not many months after that. And now 2024, we have a CPI of 313.548 divided by a $30 top. We have the ratio of 10.5. So 10.4, 10.9, 10.5. Does that mean we reach $50 by 2025? I think so. And I think this time we will go way beyond that because we're in end game territory here. Once we hit 50, we will keep going. And I think the move from 50 to, like, say, 250 is going to be a lot quicker than the move to break 30, which took 4 years and counting, and it is going to break. The conclusion is the $30 triple, quadruple, whatever top makes all kinds of sense, and it is going to break.
I must break you.
Hang in there, guys. We're going to break the $30 top. We're going to hit it today, maybe. We hit it yesterday. We're going to hit it next week. Who knows exactly when it's going to break, but it's going to be soon. And when it does, we're going to head to 50 within a few months, I think. And from there, once we break 50, I think we'll be in endgame territory, and there will be some serious jerking around going on in the banking system, or there's a better word for it, but whatever. For now, check out the Endgame Investor on Substack. And if you want to hear a story about a city of gold that Alexander the Great found and asked, how do you get so much gold? And they gave him a really good answer. Well, then sign up to be my patron on Patreon for as little as $3 a month, and you'll get that cool story and an interesting lesson. This is Rafi with the Endgame Investor with this week's Silver Report for Arcadia Economics, and I'll see you guys next week.